Depreciation Accounting, Philippine Accounting Standard Number 16. This is in page 318 of book by Valix, Chapter 15.
Depreciation is defined as the systematic allocation of the depreciable amount of an asset over the useful life. It is not so much a matter of valuation, but a matter of cost allocation in recognition of the exhaustion of the useful life of an item of PPE. The objective of depreciation is to have each period benefiting from the use of the asset bear an equitable share of the asset cost. Depreciation for the accounting period is charged to net profit or loss for the period either directly or indirectly. Now let's talk about depreciation in the financial statements. Depreciation is an expense. It may be an operating expense like in this example, or as part of the cost of goods manufactured. The depreciation charge for each period shall be recognized as expense unless it is included in the carrying amount of another asset. The following are the characteristics of depreciable assets. First, they are expected to be used during more than one accounting period. Second, they have a limited useful life. And third, they are held by an entity for use in the production or supply of goods and services, for rental to others, or for administrative purposes. Next, we will talk about the factors of depreciation, which are the useful life, residual value, and depreciable amount. The first factor is the useful life. It is the period over which a depreciable asset is expected to be available for use by the entity, or the number of production or similar units expected to be obtained from the asset by the entity. This can be expressed in years, months, working hours, or units produced, and it is an estimation of the length of time the asset can reasonably be used to generate income and be of benefit to the company, and not the length of time that the asset will last. The factors in determining the useful life of an asset are expected usage of the asset, expected wear and tear, technical or commercial obsolescence, and legal limit for the use of the asset. The first factor in determining the useful life of an asset is expected usage of the asset. Usage is assessed by reference to the asset's expected capacity or physical output, or the length that the asset is expected to produce benefits for the business. It can also be the length of the contract that allows for the use of the intangible asset. The second one is expected physical wear and tear. This depends on the operational factors such as the number of shifts the asset is used, the repair and maintenance program, and the care and maintenance of the asset while idle. The third factor is technical or commercial obsolescence. This arises from changes or improvements in production or change in the market demand for the product output of the asset. And the last one is legal limits. Legal limits for the use of the asset includes the expiry date of the related lease. The next one is the residual value. It is the estimated net amount currently obtainable if the asset is at the end of the useful life. The residual value of an asset shall be reviewed at least at each financial year end, and if expectation differs from previous estimate, the change shall be accounted for as a change in an accounting estimate. It may increase to an amount equal to or greater than the carrying amount. Depreciation is recognized even if the fair value of the asset exceeds the carrying amount, as long as the residual value does not exceed the carrying amount. If nangyari to, the depreciation charge is zero until the residual value subsequently decreases to an amount below the carrying amount. The next one is the depreciable amount. The depreciable amount of a depreciable asset is the historical cost or other amount substituted for cost in the financial statement, less the estimated residual value. Each part of an item of property, plant and equipment with a cost that is significant in relation to the total cost of the item shall be depreciated separately. The entity also depreciates separately the remainder of the item, and the remainder consists of the parts of the item that are individually not significant. For example, it may be appropriate to depreciate separately the airframe, engines, fittings, or seats and floor coverings and tires of an aircraft. Now we will discuss the depreciation methods, which are the straight line method, machine hour method, reducing balance method, and sum of the digits method. The first one is the straight line method. It is a very common and the simplest method of calculating depreciation expense. This method associates the long-lived asset's usefulness with its age. The annual depreciation charge is calculated by allocating the depreciable amount equally over the number of years of useful life. Thus, it is a constant charge over the useful life of the asset, and it is adopted when the principal cost of depreciation is a passage of time. The straight line method considers depreciation as a function of time rather than as a function of usage. The formula for straight line method is depreciation expense equals cost minus salvage value over useful life. For example, consider a piece of equipment that costs 25,000 pesos with an estimated useful life of 8 years and a zero salvage value. The depreciation expense per year for this equipment would be as follows. Depreciation expense equals 25,000 minus 0 over 8, and the answer is 3,125 per year. So, sa 8 years, constant ang charge na depreciation expense, which is 3,125 pesos. The next one is the reducing balance method. This method, also known as declining balance depreciation or diminishing balance depreciation, is a way of accounting for assets over a period of time. This method provides higher depreciation in the earlier years and lower depreciation in the later years of the useful life of the asset. This method results in a decreasing depreciation charge over the useful life. It is charged at a fixed rate like the straight line method. However, the percent rate is not calculated on the cost of an asset but on the book value of the asset, which in turn is calculated by subtracting depreciation from its cost. The reducing balance method of depreciation ensures that depreciation expenses accurately display an asset's functionality, productivity, and its ability to generate revenue for the organization. The formula for the reducing balance method is net book value minus residual value times depreciation factor or rate. For example, a company buys an equipment for 2,000 pesos that has a useful life of 3 years. It is estimated that the equipment is likely to lose 50% of its value each year, and the scrap value will be 500. For the first year, the net book value minus residual value times rate equals depreciation, which is 2,000 minus 500 times 50%, and the answer is 750 pesos. For the second year, the net book value will be 1,250 because we already subtracted the depreciation from the net book value. 1,250 minus 500 times 50% equals 375. And for the third year, 875 minus 500 times 50 equals 375. We will use 375 since this is the last year and it is noted that the residual value is 500. So we need to make it that the accumulated depreciation will be equal to 1,500 pesos. The next one is machine hour method. This method, also similar to production method, assumes that depreciation is more a function of use rather than passage of time. The useful life of the asset is considered in terms of the output it produces or the number of hours it works. The depreciation is related to the estimated production capability of the asset and is expressed in a rate per unit of output or per hour of use. It is adopted if the principal cost of depreciation is usage. This method is useful for calculating the value of different overheads fastly because depreciation is one of main overhead costs of the business, so we can use machine hour rate method for calculating the value of depreciation. The formula for depreciation expense equals number of units produced over life in number of units times cost minus salvage value. Consider a machine that costs 25,000 with an estimated total unit production of 100 million and a 0 peso salvage value. During the first quarter of activity, the machine produces 4 million units. To calculate the depreciation expense using the formula, depreciation expense equals 4 million over 100 million times 25,000 minus 0 equals 1,000 peso. The last one is sum of the digits method. Together with double declining method, sum of the digits method is one of the accelerated methods of depreciation. The accelerated methods of depreciation is on the philosophy that new assets are generally capable of producing more revenue in the earlier years than in the later years. It causes variability in the reported net income of the company. The assets are depreciated at a higher rate in the early years, and thus, the net income is lower in the early life of the asset. But as the useful life of the asset increases, the reported net income increases. In the sum of the years depreciation method, the remaining life of an asset is divided by the sum of the years and then multiplied by the depreciating base to determine the depreciation expense. The formula for the sum of the years depreciation is depreciation expense equals remaining life divided by sum of the years times cost minus salvage value, or RL over SY times cost minus salvage value. For example, consider a piece of equipment that costs 25,000 and has an estimated useful life of 8 years and a zero salvage value. To calculate the sum of the years depreciation, we should set up a schedule. Then, depreciation base is constant throughout the years and is calculated as follows. Depreciation base equals cost minus salvage value. In this problem, depreciation base equals 25,000 minus 0, and the answer is 25,000. The remaining life is simply the remaining life of the asset. For example, at the beginning of the year, the asset has a remaining life of 8 years. The following year, the asset has a remaining life of 7 years, and so on. In this example, the asset had a useful life of 8 years. Therefore, the sum of the years would be 1 plus 2 plus 3 plus 4 plus 5 plus 6 plus 7 plus 8 equals 36 years. The remaining life in the beginning of the year 1 is 8. Therefore, the RL over SY equals 8 divided by 36 equals 0.2222. The RL over SY number is multiplied by the depreciating base to determine the expense for that year. For year 1, 0.2222 times 25,000 equals 5,556. The same is done for the following years. In the beginning of the year 2, RL over SY would be 7 divided by 36, which is equal to 0.1944. 0.1944 times 25,000 is equal to 4,861 expense for year 2.
So now we would talk about the depreciation period. In terms of depreciation period, remember that depreciation are allocated, or the depreciable amount are allocated on a systematic basis over its useful life. It's not based on the revenue, but to the useful life of the amount, and it should be consistent. We shouldn't change the way of depreciating unless stipulated by the company. And so prior to that, we should still stick to the consistency of applying or calculating depreciation. Also, the depreciation starts as soon as the asset is available for use, not for when not to give excuses or to stop depreciating when it is not being used. We start depreciation as soon as it is available for use. So whether we are using it or not, regardless of it, we should still depreciate the asset. This is to make sure and allocate the best value that of an asset that it can be upon being sold. Next is depreciation only stops when the asset is derecognized. So we have two factors when it comes to depreciation period. First is depreciation starts when the asset is available for use. It will never stop until the asset is derecognized. Another thing is that when we calculate depreciable amount, we should use a consistent policy or principle to calculate the amount. Therefore, it should be allocated on a systematic basis over the number of useful life it has.